From its coming home to it has come home, the World T20 champions have landed in New Delhi after their triumph in Barbados over the weekend, giving umpteenth joy to 140 crore Indians, and they will be part of the celebrations that are slated to take place later this evening. And on this powerful and happy note, hello and welcome to Power Breakfast on CNBC-TV18 in the Mumbai News Centre. I am Hormuz Patakia, and these are the headlines we are tracking for you this Thursday morning. The S&P 500 and the Nasdaq hit a record high in a truncated session despite weaker than expected private payrolls data for June. Minutes from the Fed's June meeting indicates that despite the progress on inflation, it will not cut rates until there is greater confidence of it breaching the 2% mark. Asian markets trade with gains on a strong handover from Wall Street. The gift Nifty is also suggesting a higher start for the Indian markets. Brent crude rises above $87 a barrel as U.S. inventory falls, signaling an uptick in demand ahead of the 4th of July Independence Day holiday. Fears that Hurricane Beryl could damage oil installations along the Gulf Coast also push prices higher. The Uttar Pradesh governor has constituted a 3-member judicial inquiry commission to look into the Hathras stampede. The police file an FIR against the organizers of the religious congregation, but the FIR does not name Narayan Sakar Hari, the self-styled godman who was at the center of the event. And polls predict an unprecedented victory for the Labour Party, with voting set to get underway in the UK later today. A minister in Rishi Sunak's cabinet has already predicted a landslide for the Labour Party, but Keir Starmer says that the Tories are adopting a voter suppression tactic by talking up a Labour landslide. And on this Thursday morning here on Power Breakfast, let's first take a look at how the Asian markets are faring. It's a positive start across the Asia Pacific considering the handover that they had from Wall Street. The Taiwanese index now trading with gains of over 1%. The Hang Seng is trading with gains of 0.5%, but the focus point is on the Japanese indices because the Topix, which is the broader market index there, that has hit a record high in today's trading session. So it's a positive start across the Asia Pacific. Global cues by and large are very positive. Pull up the gift Nifty as well, and that too is indicating another gap up start for our own markets. The implied open suggesting a 97-point uptick at the start of trade for our own markets. So highly likely that the Nifty may open at yet another record high this morning, as it closed pretty close to that record high level yesterday as well. But from Asia, we move to the US markets, where the S&P 500 and the Nasdaq rose in an overnight session to post a record high as data pointing to a softening economy raised hopes of the Federal Reserve cutting interest rates in September. Now, the Dow Jones closed slightly lower, was an underperformer pressured by selling in United Healthcare and consumer stocks as well. CNBC's Contessa Brewer gets us a wrap of all the action on Wall Street.
Markets ended the shortened Wednesday trading session mixed, with the S&P and the Nasdaq closing at fresh records, while the Dow finished down slightly. The Dow shed 24 points, the S&P climbed by 28, and the Nasdaq gained 160. A potential deal for Paramount Global back on the table. Sources tell us David Ellison's Skydance Media has reached a preliminary agreement to buy Sherry Redstone's National Amusements and merge it with Paramount Global. The resurrected deal, which initially fell apart a few weeks ago, would see Redstone receive $1.75 billion for National Amusements and have Skydance acquire roughly half of Paramount's controlling shares for $4.5 billion. Paramount's special committee is currently reviewing and voting on the new deal, and this comes just a day after we learned media mogul Barry Diller was showing some interest in the company. The Labor Department reported Wednesday initial claims for unemployment edged higher last week, up 4,000 from the week before, and private payrolls increased by 150,000 in June, according to a report from payroll firm ADP. That's less than forecast and the lowest total since January. ADP also found wage growth slowed to a nearly 5% pace from a year ago. That's the smallest increase since 2021. That's what's happening here in the U.S. I'll send it back to you in Mumbai.
Now, the US Federal Reserve officials at their June meeting indicated that it will not be appropriate to cut interest rates until they have greater confidence that the inflation is moving down to the 2% target. CNBC's Megan Casella is here to give us the key highlights from the Fed minutes.
We heard from the Fed that they did see modest further progress toward 2% inflation in June. They emphasized it would not be appropriate to lower the target rate until they had greater confidence that inflation was moving toward 2%. Some of that is what we saw in the statement. It's what we've heard from Chair Powell. Most see the policy rate as restrictive, but there was some debate and some uncertainty over just how restrictive rates are. Fed also said employment and inflation goals are now in better balance, leaving monetary policy, quote, well positioned to deal with risks and uncertainties. They said they're prepared to adjust policy if risks emerge or in response to unexpected economic weakness. When we look at the outlook a little bit on the inflation outlook, several participants said if inflation persists or rises, the Fed may need to raise rates further. The Fed also observed longer-term inflation expectations remaining well anchored, so they say that underpinned disinflation. They think that's still moving forward. On economic growth in the outlook, a majority viewed economic growth as gradually cooling. Many participants saw the rise in credit card use and delinquency rates as a, quote, significant concern. A few saw fragility in commercial real estate as a downside risk to economic activity. On the labor market, some interesting debate here. The Fed saw reduced tightness in the labor market. They listed decline in job openings, a lower quits rate, reduced hiring, and slower wage growth. Several participants emphasized that further weakening in the labor market could actually lead to higher unemployment, and they say that that's in contrast to in the past when we've just seen reduced job openings over the past couple of years. Some participants said the labor market would need careful monitoring now that the dual mandate is back in better balance. But participants generally believed that further gradual labor market cooling may be required before they have that confidence to cut rates.
Let us now also listen in to what the experts have to say about the June Fed minutes, the June payrolls data, and the overall outlook on the U.S. economy.
You know, the neutral rate, if you looked at the last 5 years, hasn't budged in the SEP. It's basically been 2.5%. with a range of something like 2.4 to 2.6. And then all of a sudden, the top end of the range started to blow out a little a year ago and then really expanded over the last 3 months, top end of the range now being 3.5. So I'm going to dig through these minutes. It's hard to read them while I'm on with you guys, but I'm casually looking at it and looking at the headlines, and I think it's a healthy discussion.
I think the market is in a sweet spot in terms of where the rate cycle is. I have some models that indicate that the bond market, the 10-year yield, is at around fair value, 4.25, 4.5. That's pretty much where it should be based on where the forward curve is and where nominal GDP has been averaging. The Fed, of course, is at 5 3/8 with a bias to ease, and it has prudently been holding off on that because it's much better to wait too long than to go too early and then have to take it back. And the economy doesn't seem to be, hanging on for dear life, waiting for those for those rate cuts to happen. But certainly the core PCE number from a few weeks ago certainly gives the Fed a little bit more margin to maybe launch that first rate cut, in the coming months.
It's been a very modulated cool down. The labor market is striking the right note at the right time to be consistent with that gradual easing that's consistent with the 2% inflation target. The concern, and this is one concern we have, is how concentrated these job gains are. The leisure and hospitality sector is carrying 40% of the job gains this month. And so while we think that this is a gradual cool down that we all expected, I'd like to see the hiring be more broad-based than it is now. Leisure and hospitality, the labor market more broadly, has really helped the Fed. It's helped the Fed be patient. It's kept its pace and then gradually cooled again at the right time.
That's all we have on the global market action so far. But how will all of these overnight cues impact our own markets? We have our research team joining in with how the trade setup looks like and the stocks that are likely to be in news today. First up, Sudarshan gets us all the market cues we need to watch out for. Sudarshan, good morning. A very good day yesterday. Looks like the trend is continuing today as well.
Exactly. So if I can sum up the market move of last few days in one line, it can be said it's a one-way traffic, and seems like that we are set to welcome Indian cricket team with another day of record opening. Now talking about Wednesday's move, it was a record close for major indices. Sensex crossed 80,000 for the first time, and gain of last 10,000 points from 70,000 to 80,000 has been the fastest ever. On market capitalization front, India remains the fourth biggest stock market, with market cap now approaching rupees 450 lakh crore. What's interesting in the move of last few days is we are seeing a basket buying. Instead of few stocks from one sector, we are seeing buying in almost all the names. The week had started with a big buying in IT with an expectation of a strong earnings, and now after HDFC Bank's shareholding details and a few quarterly updates, we are seeing a similar pattern in banking names. Take a look at the delivering buying in the banking names that were top Nifty contributors yesterday. For HDFC Bank, it was nearly rupees 7,000 crore, highest single delivery buying that bank has seen in the last 4 months. And this was reflected in FI flows for yesterday as well. FIs bought shares of more than rupees 5,000 crore in the cash market, while sell figure for DIs was less than rupees 1,000 crore. And this higher trend market up move is expected to continue today as well. GIFT Nifty is indicating a started record high for Nifty, and currently it's up more than 100 points. We are seeing support from global cues too. On Wednesday, we saw S&P 500 and Nasdaq hitting record highs. Even US 10-year yield has slipped below and is now back below 4.40%. Also, Asian markets have opened higher. Japan's index Topics is at a record high, and in the cues to watch on global front, US market is shut for Independence Day. Keep an eye on FTSE as UK general election begins today. Talking about stock-specific reaction, we should see stocks reacting to their business impact. Some of them are Bajaj Finance, L&T Fin and Bandhan Bank. Also, keep an eye on telecom companies and new tariffs come into effect today.
Only apt, right? Because the entire country is cheering for the Indian team to arrive. So why not the markets? Sudarshan, thanks a lot for that update. Now over to Vamakshi, who would list out the stocks to watch out for in today's session. Vamakshi, good morning. Plenty of business updates, I guess.
Well, absolutely, Ormaz. A lot of business updates. Let me first start off with the one that came from Bajaj Finance. They reported a growth of almost 31% on a YOY basis in their AUM, and their AUM now stands at 3.54 lakh crores. Deposit book also saw a good uptick of 26%. The customer franchise has also seen an uptick and it now stands at 8.8 crore customers. Bandhan Bank reported a nearly 22% jump on a YOY basis in its loans and advances. It was up nearly 1% sequentially. Total deposits have grown at a much faster pace as compared to the loans and advances. It's grown at almost 22.8%. While on a sequential basis, however, it has declined 1.5%. The CASA ratio has declined to 33.4%. Suryodaya SFB is the next one we will be watching out for. Gross advances were up 42% YOY, 4% sequentially, but the disbursement saw a sharp downtick, down nearly 26% quarter on quarter. But nevertheless, on a year-on-year basis, they were up almost 46%. Total deposits saw an uptick, which was largely in line with the advances. They were up 42% YOY, and the CASA ratio has declined to 17.7%, but the asset quality has improved, and gross NPA now stands at 2.67% for the company. L&T Finance reported good growth in its retail disbursements. They were up almost 33%. The retail loan book resultantly saw an uptick of 31%, and now the retailization percentage now stands at 95% as compared to 82% a year ago. Vedanta also reported its operational update for the first quarter, and in this quarter, total aluminium production was up 3% YOY, flat sequentially. Mined metal production was up 2% but was down nearly 12% sequentially, and saleable metal production was up 1% but down 4% sequentially. GE T&D India has received orders. It's received an order worth almost 64 million euros from Grid Solutions France, and it has received another order worth 26 million euros from Grid Solutions Middle East. And lastly, let's also focus in on Brigade Enterprises. They've signed a joint development agreement. This is for a residential project spread across 8 acres in Bengaluru, and the GDV of the project is expected around 1,100 crores.
Vamakshi, thanks a lot for that update, and we'll keep all of these stocks on our radar. And lastly, Nigel Johnson with cues from the F&O space. Nigel, good morning. The weekly expiry today, but it's been one-way traffic for the Nifty.
Well, that's right. Things have been looking good. The only problem yesterday was we made the high of the day in the first hour, and after that, we couldn't get past that. So that could be a bit of a worry. But looking at the GIFT 50, well, we're going to be gapping up with a gain of closer around 100 points odd. What transpired yesterday? Well, on the Nifty, we had a mild short covering that we saw. While in the Nifty bank, there appeared there was fresh long positions that were added. And that one will have to lead the way from here on as well, given its weight and given the way that, in fact, it bounced up and traded, ended with a gain of close to around 100 points. What did the FIs do? Well, it tallies with what we saw on the Nifty as well as the Nifty bank. It appears they added long positions, particularly on the Nifty bank. Well, there was some short covering, as that chart is telling you on the screen. And in a matter of a month, just take a look at the way the things have changed. Well, just a month or so ago, the short positions were at around 84%. Now, that's turned around, and in fact, now you have the long positions at around 84%. So that graphic plate, in fact, is telling you the story, the way the markets have turned around. And from being net short by close to around 3.5 lakh contracts, now they're net long more than 3.5 lakh contracts out. So that's the big swing factor. And the FIs and the clients, well, they've done a bit of a switcheroo, so to say. Because the clients earlier were long, the FIs were shorts. Now you have the FIs that are long, while the clients are net short on the index. What about the other positioning that we're looking at on the Nifty options chart since today's weekly expiry? Two strikes were fairly active. It appears there's a short straddle taking place. At the same strike, you ride the call as well as the put. Pocket roughly around 150, 180 rupees going by the premiums that we saw in the last few sessions. And the broad band will be 150 plus 24,300, 150 minus 24,300. So you get the broad expiry range that we're looking at. You'll have to say that once we get past that level, if in fact we break out of that range, then the markets can go anywhere. But for the time being, it appears the street is positioned for that range. Back to you.
300-point range, then we'll watch out for that on the weekly options expiry for the Nifty. Nigel, thanks a lot for that update. But time for a short break here on Power Breakfast. Up next, UK goes to the polls today. We get you the latest on the election. Stay tuned. Back on the other side. Welcome back. And Great Britain goes to polls today to decide who between the Conservative Party's Prime Minister Rishi Sunak and opposing Labour Party's leader Keir Starmer will take on the reins of the country. The polls are suggesting that the Labour Party is likely to come into power with a huge majority. If successful, my colleague Sanjay Suri filed the story on the battle for Westminster.
British voters are taking a decision today who they want in here at 10 Downing Street. If the opinion polls are right, Rishi Sunak is out and Keir Starmer is in. But of course, no more opinion polling now. It's time for the real polling. Over the space of 15 hours, from 7 a.m. until 10 p.m. local time, an estimated 46 million voters in a population of 67 million will be eligible to elect 650 members of parliament. The average size of a constituency is about 70,000 voters, and of course, not everyone votes. At the top of everyone's mind, as declared, three issues: the economy, immigration, and the National Health Service. Rishi Sunak's record on all three is dubious amidst contested claims. Labour says the government has failed, the government says it hasn't. Sunak has not proved particularly popular, but then Starmer is not exactly Mr. Popular either. This is turning out to be a choice that will make a winner of the one less unpopular and the one untested. The British are quite bored with 14 years of a single party. That boredom could be decisive today.
Could be decisive today indeed. Sanjay Suri, thanks a lot for that update from the UK. Now on to France then. The latest polls show that the country's far-right party may actually fall short of the majority in the upcoming runoffs. Pollsters had earlier estimated that Marine Le Pen's National Rally would win up to 300 seats after the first round of votes last weekend. But the latest poll suggests that the right wing could only clinch up to 220 seats. Now that is falling short of the 289 seats required to control the National Assembly. Now this comes after efforts from the centrist and the leftist parties to block Le Pen's party. Now more than 200 candidates had backed out of the races this week to give other mainstream candidates a better chance of beating someone from the far right. Now the runoffs will take place this Sunday, the 7th of July. And time for a short break here on Power Breakfast. Up next, we get you cues from the commodity space. Stay tuned, we'll be right back. Welcome back, and as promised, Manisha Gupta is now joining in with all the updates from the commodity space. Manisha, good morning. What are you picking up today?
Hey, Harman, thank you for that. Well, today is a day when all of the commodities are trading in the positive. We have Brent crude prices trading at a 2-month highs, and this is after the U.S. inventories have declined by 12.2 million barrels in the previous week. So that tells you that the on-ground demand in sense of 4th of July and summer driving seems to be picking up. Also, the hurricanes in Gulf of Mexico, the prolonged conflict between Israel and Hamas is continuing to add to the premium here. But overnight, and the Asian markets right now, it has been good going for the metals as a sector also. So you have a decline in US dollar and treasury yields, and that has been supportive, taking the gold prices to a 1-month high. Silver is trading at a 2-month high. You have iron ore prices trading at a 1-month high as well, with 2% gains overnight. Copper has continued to gain for a 4th straight day today. And we also are looking at aluminum prices, zinc prices trading in the positive. So it started at a very, very strong day for major commodities.
Very strong day indeed. Manisha, thanks a lot for that update. And from commodities now to more national news, and more developments have emerged in the Hathras stampede. A 3-member judicial committee has been set up by the Uttar Pradesh government to run a probe into the stampede that killed 121 people in the Hathras district. The Chief Minister Yogi Adityanath has handed strict instructions to officials to prepare the standard operating procedures, and permissions for such events would only be granted only if the minimum conditions were met. Additionally, the Uttar Pradesh police has filed an FIR against the organizers of the congregation, but the FIR does not include Baba Narayan Hari, also known as Sakar Vishwa Hari Bhole Baba, as an accused. And the T20 World Champions are finally home after being stuck in Barbados for nearly 3 days due to the Category 4 Hurricane Beryl. The champs touched down in New Delhi earlier this morning and were given a grand welcome from supporters and well-wishers. Team India will now make their way to the Prime Minister's residence for breakfast and will then leave for Mumbai later in the afternoon. The team will also have an open bus parade in the evening, where they will proceed from Nariman Point in Mumbai to the Wankhede Stadium for a felicitation ceremony where they'll be awarded the 125 crore rupee cash prize announced by the BCCI. Happy and joyous moments indeed for our champions and, of course, for the crores of cricket fans across the country. But with that, it's a wrap on this edition of Power Breakfast from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call takes the action forward.